Yo, what's going on, guys? Top of the evening. We have no market tomorrow. I just realized that about an hour ago. Sorry I missed you last night. I ended up staying a couple nights up there in sweltering Phoenix, Arizona. Boy, it makes this down here look like Alaska in Tucson. Man, it's hot. Holy crap. This heat, though, is a little bit different. I said that before down here in AZ compared to Seattle. It was 100 last year up in Seattle, and you couldn't breathe. But this 100 here feels like 80, 85. It's weird. I never knew anything about that damn dry heat. We got no market tomorrow. For crying out loud, I just figured that out about an hour ago. Yeah, for the old Juneteenth, since it's today, they're going to follow it up by tomorrow by shutting the old market down. Juneteenth. So happy Juneteenth, everybody. More importantly, happy Father's Day to all you fathers out there. Even you mothers, first one celebrating, I guess without my dad, if you want to call it celebrating. A little bit rough, thought about him yesterday and today, but we will get through that. So no market tomorrow. What in the hell are we going to do, folks? Just talk shit and look at the old Twitter, I guess. Box office killing it this weekend. I actually went yesterday and seen the Lightyear. That was outstanding. Really was. Not doing so hot in the box office over the weekend, but the rest of the movies are, with Father's Day. Yeah, movies are dead, folks. Always remember that. What are we going to touch on? A few things here. A couple of Goldman Nutsacks articles. A very good piece over there by Tyler at FX Hedge, or Zero Hedge, sorry. And then, what else? Oh, Bill Maher got schooled in a quick little clip we'll show. And then we're going to bring up one of my favorites, old Thomas Peterffy over there, the founder of Interactive Brokers. We're going to touch on a couple brief sentences he said a year ago. I love bringing up oldies but goodies, a kind of a quick refresher on what a short squeeze is, how it works, and if they have to cover, they're going to have to cover. And Thomas will touch on that here shortly. Last week, I did not even realize this till I got and started looking today. This week's shorting activity was the second largest ever on record. We will touch on that in another article here too. One more from FX Hedge. Wow. You guys obviously seen the crypto dump to what, 17.5, 17 and a half. 2 billion worth of Bitcoin over the weekend to attempt to stabilize the price. Jesus. I guess it brought it up 17.5. Where are we sitting at now? 20? 19 down. This was 20. God, did that just drop 400 and something bucks in minutes? I don't know. But this is a big deal, you guys. I mean, we got liquidations going over. We got France. The old franc over there is not doing too well. We'll touch on that here in a minute too. But man, oh man, not just the United States of America, but this whole entire planet, world, COVID. I mean, what? I don't know. I really don't even know. Here's the old Tyler Durden article over there, Zero Hedge. Outstanding once again. Nasty squeeze on deck. Last week's shorting by hedge funds was the second largest ever, as we just touched on. Last week, when we observed that Monday the S&P finally tumbled into a bear market. Oh, we're going to touch on the damn bear market over the years, about 100-year history of a bear market or a crappy economy, whatever you want to call it, and then some. So anyway, that there. The main thing I wanted to touch on was down here. Goldman trader John Flood, available ZH professional subs. In notional terms, this week's shorting activity was the second largest. We know that. Everything down, down, down. But there is a punchline. In terms, this week's shorting activity was the second largest on record, behind the week ending 6/12 of 08. 2008. Anyone remember that year? Yes, you do. Single stocks, Marco products, and both shorted and made up 83%, 17% of the short sales. For perspective, 9 out of 10 largest stock shorting weeks in Goldman Nutsacks record occurred in 2008. Weeks ending 6/12, 5/8, 6/5, 2020. Weeks ending 4/5, 3/5, 3/12, in 2022 year to date. Weeks ending 6/16, 1/6, 6/9. This week's ending 2/25/21 was that other one. Not much left in this article. As you can see, a lot of shorting, a lot of decline, a lot of high-priced gasoline. I expect some sort of run with our beloved shorted stocks here very shortly, and I'm sure a lot of you guys do too. No dates, remember, no dates. Everybody gets pissed off. Here we are. Look at this. My Zero Hedge tweeted this out earlier too. Table 1, bear markets are quicker than bull markets. Here's the history of bear markets starting at 1903 is in there too. But anyway, worst to not so bad down below, but still obviously bad. Crash of 29, Great Depression, second, blah, blah, blahs. One I wanted to touch on, where's 08? COVID's right here in the middle of the pack. 08, right here, dot-com bubble, 1908, 2020. You guys can pause it, take a peek at it. Thought that was pretty interesting to run down. Where in the hell are we going to land here in 2022? I'm assuming 2022. What are we in? Halfway through the year? Yeah, it's going to be 2022. Where is this going to fall, guys? Where in the hell are we going to end up? I don't think it's looking very good. All signs obviously are pointing that way, and then some. Uncharted territories. Here we are. I've played this thing probably 2 or 3 times for you guys. You guys have seen it. I want to touch on just a brief minute and a half on a quick reminder in case you guys have not seen this. This was done right at the game, as you can see, GameStop. This is AMC, $9. This is January 28th of 2021. A good refreshing course, and if you guys, newer folks, have not seen it, pop this whole thing in there. It's about 12 minutes long, if I remember right. Just want to touch on a couple brief parts of this right here.
Consumer base about a backlash that brokerages with very low fees was meant to democratize investing, and instead many feel that they're unable to exert what is their authority.
So I'm very much in favor of democratization, but I am not in favor of short squeezes. So why would a person buy this stock for right now it's $228? Why would a person buy this stock for $228 when its regular value is about $7? The only reason to do that is to join the short squeeze. If the short squeeze happens, the stock could go to infinity practically, because of course the shorts have to borrow the stock, and once there is no more stock to borrow, they cannot deliver, right? So but they have to. So the broker has to buy in the shorts at any price. So there is no solution to this unless shorts are liquidated.
Okay, well, that's one perspective. I am curious, Thomas, then when you talk longer term here, is there going to be more of a permanent restriction, not only on the specific companies that we're talking about, but companies that get to a level of short interest that is just so out of whack with reality, like we saw with GameStop? Should investors expect that going forward if they're using your platform?
Yeah, I would think whenever the short interest approaches 80, 90, 100%, investors can think that they cannot make, on the long run, most investors will not be able to make money on joining short squeezes.
Do you see the problem?
It's basically illegal.
Yeah. Do you see the problem, though, where...
Oh, Thomas. The 10 minutes, that's how long that thing is. I'll pop that in there for your viewing pleasure if you guys have not seen that. Even if you have, take a listen to it. He was pretty freaked out. This one he mentioned, they were, I don't know if within minutes, but he was scared to death about the whole ordeal there. As you can see, AMC was at $9. That's one probably around, I think I held that about 11 days at an average of $17 or so, and that was right there, was down to $9.13. GameStop was at $228. He says, hey, you guys jumping in, trying to make it, get the short squeeze. Most people that hold GameStop, a lot of people that hold GameStop have averages of 150 to 280, somewhere in there, probably 220 on a lot of them. I think my average when I had a ton of those shares was like 140 something, but I averaged down 2 over time. But yeah, that's what we're waiting for, folks, as we all patiently wait, only a year and a half into this damn thing. Here's the old Bloody Switzerland here. This is a Today article. The tech stocks in danger as Switzerland moves to stabilize the old Frankfurter down there. Once regarded as a safe haven currency, the Swiss franc has weakened to multi-year lows against the U.S. dollar in 2022. Now, after announcing its first rate hike since 2007 this week, Swiss National Bank Chairman Thomas Jordan warned the central bank is prepared to take the necessary measures in every situation to ensure price stability of the franc. Kind of like something like their money and this here too, folks. Hello. And a quick roast on the way out the door. Crystal ball. Just schooled the bleep out of Bill Maher on inflation. You'll love to see it.
The economy. There's way too much government spending, and that's why we have inflation. So that's a large part of that. It's just basic economics.
And that is not basic economics. We had this thing called a pandemic. We had a supply chain crisis, and by the way, there's a war in Ukraine.
It played a role. It's played a role.
So to act like the only reason we have problems now is because people got a little bit of money in their bank account is just not honest.
And a little bit of money, they got more than we spent in World War II. So don't act like
hold on. Hold on.
Don't act like you said. Don't act. Don't act like we had to react to the pandemic exactly the way we did. We had to spend $6 trillion.
Okay, but how about the trillions that the Federal Reserve shot at Wall Street? For some reason, people don't get upset about that.
How much? What'd you say?
Fueled the trillions of dollars the Federal Reserve shot at Wall Street to backstop the stock market and the bond market. No one gets upset about that, even though that was a massive
I don't know what
factor in
you're talking
inflation.
about. What do you mean shot at Wall Street?
Well,
when are we talking about?
We're talking about buying assets, buying stocks, buying bonds, buying treasury bills so that they expand the balance sheet. This is during the crisis, the coronavirus crisis. When the stock market crashed, that is what the Fed did. They went into action. They shot
but the
trillions
stock market
of dollars
didn't crash during COVID.
Now it's crashing. It's crashing now.
It crashed, and the Fed came in and backstopped it. That's what happened.
What, it crashed and we never heard about it?
No, it crashed. Go back and look at it.
I think
it fell off a cliff.
When?
The Treasury bond market stopped functioning, and the Fed took extraordinary action it's never taken in history.
I don't
Somehow
remember
no one
that.
gets
What do you mean
upset.
the first week of the
Somehow nobody gets upset about the rich people who got tons of money and tons of support, way more than working class people did.
Sure
but
they
oh
do.
my God, people were able to feed their kids and they had a little bit of money in their bank accounts. It was the worst thing in the world.
No.
That is one small part of the inflation story, and is, by the way, not the only thing that we can deal with to get out of this mess.
the economy.
I absolutely love that. Come on, Bill. I love Billy, but dude, don't act like you don't know what's going on. Billy himself, of all people, knows what's going on. Well done, Crystal Ball, a new favorite name. Okay, guys, we're going to pop this in there. If you guys have not seen that, watch it again. We got nothing else going on until tomorrow. We got to keep an eye on this old crypto here. It looks like it's kind of somewhat stabilized. Golly, I've been touching on this, 10 days, we're at 26 some grand. Ran down to 17 and a half. Oh my God. You guys get the picture. Okay. What are we doing tomorrow? We don't even know. But anyway, we'll be back on Tuesday. We got Tuesday, Wednesday, Thursday, Friday, and then another weekend. Short week this week, guys. Don't open your apps in the morning. Don't expect any price movement. It's not a halt. The market is closed. All right, guys. Talk to you later.